portfolio analysis, selection of the different investment options available to the investor. So in last three chapters, we understand first the what is investment, what is the systematic investment, what is the definition of the speculations, what is gambling, what are we can say these are the three different types. By using this, the investors can we can say gets the return on the funds he possesses. Okay, so that we also understand what are the different marketable and non-marketable securities which are available to the investors. Okay, so by investing his hard-earned money, his funds in any of the investment avenues which is available to the investors, he can earn the return. Okay, but we also analyze in the second chapter, that is the risks and return analysis, that we see in the second chapter. In that we study that whenever the investor invested in any options which is available to him, so there is always the risk associated with that investment. Okay, so we see the relationship between risk and return. Okay, so we see that the risk and the return are directly proportional to each other. Whenever the investor takes the more risks, he'll get the more return. But we can say the risk is more in such a type of investment. That means he may lose all his funds. Okay, so the huge losses is always associated with the high risks financial securities. Okay, so whenever the investor takes the low risk, he gets the low return. With some of the investment we takes that loans, bonds, debentures are the we can say the low risk investment. Then the high risk investments, whenever the investor invest in the some of the derivatives like the forward futures options, swaps. So these are the we can say some of the high risk investment. Okay, so we in last chapter, that is the valuations of bond and shares. Okay, in that we understand what is bond. Okay, it's a type of we can say financial security, that is the loan the company is taking from the banks. Okay, and we understand how we calculate the value of, that is the intrinsic value, real value of the bond. I told you in the last sessions. We will also understand what is the time value of money, how at the different times the value of the money is different. Okay, because of the purchasing capacity, or you can say purchasing power of the money. Okay, how money purchase the different goods and services, based upon that we decide the value of that currency with the different times. Okay, so we understand all these things. We also understand the valuations of shares, how we calculate with the three different methods. That is the PIE ratios, we can say the multipliers methods. Okay, so we understand how, or we can say the dividend, Gordon dividend model. By using this, we can calculate the value of the shares. Okay. So now up to that date, we also understand the investment process, how the any investors we can say systematically invest these funds. Okay, so in investment process, the first step we study, that is the we can say setting a objective, that is the goal setting is the first step in the investment process. Okay, so what investors want after how much time. Okay, what are his dreams, or what are the objectives of the investor? Based upon that, he'll do the further process in the investments. Okay, after setting the goals, he analyze the how much funds or the money he has for the investments. Okay, and by using the different analytical tools, he analyze the market, he analyze the different investment avenues which is available to him for the investments. And that means they in second part he do the analysis part. In third part, what he do, he prepared a plan. Okay, he prepared a plan. That means uh, In plan, he decided that how he diversify his the funds or the money he has. Okay. Then next one is the execution of a plan. That means after that he execute a plan and he start investing in the different investment avenues which he put into the plans he prepared in the previous we can say in the previous step. Okay, after the execution of plan, that means now he actually invest in the different portfolio. Okay, and next one is we can say the monitoring and review of the his investment portfolio. That means how his financial securities is perform in the market, what returns he is receiving, or what is the risk associated with his investment. He analyze that. Okay, so this is we can say the investment process. So why or what is portfolio management and why portfolio is important from we can say from the point of view of the uh, from the point of view of the investor, why this is important that we are going to understand in this uh, sessions. Okay, so first we understand what is the portfolio. Okay, so portfolio is we can say it is the we can say it is a systematic process. Okay, in which we select the investment options from the we can say diversified sector. That is the portfolio is we can say a strategically assembled collection of investment or the project managed together as a cohesive unit. Okay, that means we not invest the lump sum amount in any one investment options which is available. Okay, if you do so, that if the that particular company or that particular sector is not performing well, okay, so we so there is always the fear that we may lose all the money in that investments. Okay, so we want every investor wants the financial security. Okay, he wants to secure his money, his funds, and also he wants the maximum return with his investments. Okay, so there is always more risks if the investor invest in the one company, in the one organizations, or we can say in the one industry, one sector. Okay, so there is always the risk associated because we know that the market is the volatile market. So every company is we can say in is working in the open market. The business of the company is having the impact of the different factors like the political factors, economical factors, environmental factors. So all these factors is having the impact on the businesses. If the market condition is not go well with the business of the company, then you may lose all your funds. So that is the we can say the major risk associated with the investment. uh, but but if we diversify your investment, then your risk will be minimized. For example, I gave you the example in I think one of the sessions that you if you have 100 rupees for the investment. Okay, if you investment that 100 rupees in any particular company, let's take for example, if I say I invest that my 10 rupees in the Mahindra, but now we can say the market conditions are not well go with the Mahindra's business, or we can say the fraud in inside of the company. So in that case, what happened if the company is not going well? Then my 100 rupees is in the risk. Okay, I may lose my hard-earned money, that my hard-earned 100 rupees. Okay, so this is the one type of investment. Okay, but what a smart investor do, they made the portfolios. That means they diversify their investment. Okay, they select the different investment options available to them very smartly by by doing the analysis part. Okay, that means the investor do not invest his hard-earned money, mm, just we can say by the gambling methods. Okay, he do all the proper systematic analysis of the stocks, and then he diversify his investments. Okay, so in finance we can say when the investors invest in the diverse assets like the stocks of the different company. Okay, he invest in the bonds, he invest in the commodities like the silver, golds, diamonds, platinums, or some of the agricultural products. We can say when you invest in the real estate and the alternative investment. When that means when you invest your 100 rupees into the different investment options now available to you, you put we can say 10% of 100, we can say the 10% of 100 rupees is the 10 rupees. Okay, when you invest only the 10 rupees in Mahindra, okay, when you invested 10 rupees in Reliance, when you invest your 10 rupees in, we can say, the commodities, okay, like you buy the 10 rupees gold, 10 rupees silver, when we invest the 10 rupees in, we can say, the options. So this is how or 10 rupees in real estate, your 10 rupees in bonds. So this is how a smart investor makes the portfolio. Okay, so in that case, when you made the portfolio, if the market is not go with the Mahindra's business, then now you will lose only the 10 rupees. Now your other 90 rupees are secure, and you will continuously getting return from that, we can say the other 90 rupees. Okay, so this is the concept behind the portfolio management. So portfolio management is nothing but, we can say, it is the risk reducing method. In that, what the investor do, he diversify his investments. Okay, whatever the funds he have for the investment, okay, he put into the different investment avenues with the different investment options he has by doing the analysis part. Now in analysis he has the two options that we already I taught you, that is the fundamental analysis and technical analysis. So in fundamental analysis he do we can say he see the financial position of the organization. He analyze the different financial statements like the balance sheet, like income statements, changes in equity or cash flow statements. Okay, or he sees some the we can say the economical factors like the inflation rate, GDP growth rate, unemployment, interest rates in that particular economy. So by doing all these analysis part, also he also do the technical analysis part, that he analyze the patterns of trends of the value of that or the returns get in that particular sector. So he do all this part, and after doing all this fundamental and technical analysis, he choose the best option which is available for the investments. Okay, he choose the best investment avenue. That means in we can say in the second in the third step of the investment process, that is the prepared a plan, he made a proper plan by doing the and we can say the analysis part. And after that he execute the plan, he start investing now. Now what he do after executing a plan, he continues monitor the investment, that is what his analysis is going, we can say, go with his expectations or not. That is the main questions. So in monitoring and we can see in the review process, if the investors find that if any of his investment avenue, investment option is not doing well, the return he's getting is low as per his expectation. His expectation is the more, but now he, because of some of the factors, the company is not going well. uh, then what we do, we take the investor, we can say, take out this investment and put into the another best options. So this is how the portfolio reduce your risk of defaults and increase the returns. So portfolio management is invest portfolio management, we can say, it is a very important aspect from the investor's point of view. If the investor is not doing he is not making the good portfolio, then he'll not achieve the objective or the goal he sets at the initial stage of the investment. So the diversification is we can see is one of the most important part of the investor's life. Okay, so we can say now, how the portfolio management process we can say followed by the different investors. Okay, so the process is we can say in process what we do in portfolio management, we can say systematic selection, monitoring, and adjustment of the investment to achieve the specific financial objective. Okay, I already told you at the initial stage in the investment process, first we set the finance goals. That is, after 10 years, I want to buy a Mercedes. In 10 years, I want to buy a house in any of the city, like the Pune city. After 10 years, I want to buy, we can say, some of your dream cars or the bikes, or you want to set a, so we can say a specific business. So it may be your objective. So to achieve that objective, what investor do? He systematically select. Then he monitor if the we can say some of the options is not doing well as per his expectations. Then he diversify the investments, or he made the adjustment. Okay, so this is how the process of the portfolio management the one investors follows. Okay, so now what is the primary goal of the portfolio management? To maximize the return and minimize the risk through the we can say a strategic asset allocation and timing. Okay, so I told you how here the any particular investor does this, how he minimize the risks by the diversification into the different sectors, and how he maximize the return by adjusting the on time adjustment of these portfolios. Okay, so this is we can say the process and the primary goals of the portfolio management. So what are the different types of portfolio risk? Okay, so why we need to do why we need to do a good portfolio. What are the different types of risks associated with the investment option which is available to the investors? So these are some key portfolio risks we can say always associated with the investment. That is the company specific risk. Okay, we all know that there is always the risk associated with the any of the particular company. If he is not the company is not doing financially well, then you as the we can say if I purchase the share of that particular company as a owner, I have to bear the losses. So any company specific risk, that is the we can say first risk associated in the portfolio. That is the poor performance of the individual holding due to the management decisions, competitive pressures, or the operational challenges. Okay, as I told you, if the market condition is not go well with the any company's business, then what happen? The company's performance will be poor. That means the company is not doing financially well. So in that situations, that you will not get the expected return. Okay, so this is how the company, any particular company, gives the risk to the investors. Now, second one we can say the market or the systematic risk. So the overall market downturn affecting all the assets regardless of the individual company's performance. Whenever we see the slowdown of the economy in a then the overall business overall we can say that impact the every company's business. Okay, uh, uh, so in such a conditions, we the investors not getting the expected returns. Okay, so this overall market down, we know that in business cycle, we know that in the business cycle, when the market goes through the recession and the depression stage, so in such a condition, that so investor must avoid the investment in the recession and the we can say in the recession and the depression stages. Okay. Next one is we can say the interest rate risk. So changes in interest rates impacting the bond prices and the overall portfolio valuations. Whenever the investor invest in the bonds, okay, if the interest rate is not go well with these expectations, if the interest rates decreases, that we can say affect the bond prices, that reduces the price of a bond. So in such a situations that the investor has the losses. So the next one is which you can say the liquidity risk. Okay, so difficulty selling the assets quickly without significant price impacting during the market stress. Okay, so many times what happened if we purchase such a type of financial assets or the instrument which are which are hard to convert into the money, into the liquidity, into the cash. So in some of the cases, if we invest in the real estate, we purchase any property, okay, with the expectation of the good return, but we can say uh, now after the 5 years it is hard to sell the same real estate property, okay, because of the locations and all these things. So this is also a one type of risk, that is I want to sell my real estate property and and want to invest it into the another investment avenue, okay, the what I think that gives me a more returns, but because of the we can say the now I am not able to sell my real estate property. So because of all this that I the cash cash what I expected to get into invest into the another investment avenue. So uh, we can say that is the liquidity risk. That means you cannot easily convert your financial instrument into the cash or the cash equivalents. So that is one type of risk. One is the currency risk. In the international finance, I told you that the exchange rate decided by the market forces, that is the demand and supply of the currency on the international market. So we can say the fluctuations in the foreign exchange rate affecting the international investments. Okay, if we can say if the exchange rates gets higher, okay, so that's will we can say you may have a losses whenever there is the increase in the exchange rate as compared to the we can say the home currency. Next one is the inflation risk. So rising prices eroding the real purchasing power of the investment returns over a time. If the inflation in the economy gets increases, that automatically we can say degrades your return. Okay, so this is how. So these are the all these six type of risks associated with the portfolio. Okay, next one is impact of the risk. So if the any of the risks we can say execute, so what how he impacts the overall portfolio or the overall return of the investors. Okay, so here some of the real world examples are given to us that in 2008 financial crisis, the systematic risk wipe out diversified portfolio as the correlation proves the one during the crisis. Okay, so in 2008, so those investors we can say has a less impact. Those who systematically diversify their investments, because we know that in 2008 financial crisis, some of the major some of the sectors who are majorly impact. That is the banking sector, IT sectors. Okay, so these two sectors are we can say has the very bad effect of the 2008 we can say the recession. Okay, so those investors who smartly diversify their investments. Okay, so those we can say have the less losses. But those investors have the huge investment in the banking, finance sectors, and in the IT sector, those who has the had the huge losses. Okay, so second example is emerging the market currency crisis, the sudden devaluation causing the significant losses in the international portfolio despite the strong fundamentals. We know that in some of the times that the value of the one currency with respect to the another currency, the exchange rates we can say devaluate. That means if the value of the rupees as compared to the dollar devaluates at a very we can say at the large scale, what happen? We will have the huge losses when we invest the funds in the foreign. country in dollars. Okay, so this is how im- uh, uh, this is are the impact of the different portfolio risks associated with the investments. Okay, now we understand what is the diversifications. Okay, how we made the diversifications. Okay, and what is mean by that diversifications. So diversification is the core risk management tool. That means with the help of diversification, the investor minimize the risks and maximize the return. So diversification is one of the most important tool to we can say to do a good portfolio. In to made a good portfolio management. So what is mean by diversification first? Okay, so there is a one we can say um, in English we call, so don't put your all your eggs in a one basket. That means the proven wisdom that forms the foundation of the modern portfolio theory. That means don't invest all your funds in the one particular company, in particular stocks, or in particular industry. Okay, so always put your money with the diverse or with the diverse companies, with the diverse investment options which is available to the investors. Okay, so diversifications involve, we can say, a strategically spreading investment across the different assets, sectors, and geographies to reduce the overall portfolio risk. Okay, so by doing the different types of analysis, that is technical analysis, a fundamental analysis, the investors made a strategy first. Okay, so it is not the case that just to diversify the investment, we invest in any diverse stocks. Okay, we do it very properly. First, we do a systematic analysis, that is the fundamental analysis and technical analysis, and then investors prepare a strategy for the investments, and then he chooses the different investment avenues in the diverse we can say in diverse industry, diverse sectors, and then we choose the different investment avenue, and then investors invest with that different investment options. And why he do this? To minimize the risks and to maximize the return. Okay, so the primary goal of the diversification is to reduce the portfolio volatility. That means that is we can say risks associated with the different financial instruments. By selecting the investments with the low correlations, ensuring that poor performance in one area can be offset by stability or gains elsewhere. Okay, uh, if we in any particular case that if we have a losses in the one or two sectors, uh, your other investment is safe and giving you the continuous return. Okay, so this is the concept behind the diversifications. So how diversification reduce the risk? Okay, so how we can say whenever we diversify the investment, so how he benefits the investors. First one is the risk offsetting. That means losses in one assets are balanced by gain or stability in others. Okay, so when we have the losses in one of the particular company, particular assets, so the other investment of the investor giving him a continuous return and a stability also. Next one is we can say the idiosyncratic risk reduction. These company specific risks are minimized through the broad exposure. That means we can say any particular company may, we can say due to some of the factors, they can say they have the uh, financial losses. So we never do the investment in any specific company. We diversify the investment and then we reduce the risk. Next one is the volatility damping. The overall portfolio swings are reduced through the systematic risk remains. Okay, so by doing the systematic analysis, um, the investors can do uh, the portfolio management, and then he can reduce the risks. So this is the types of diversification. How even investors can diversify his investment with the different investment avenue or the different investment options available to him. So first one is, we can say, the asset class. That means we can diversify the investment into the different assets class. So what are these assets class? That is the stocks. Is, we can say, the one type of investment, that is it is the share investment, investing, we can say. Next one is the bonds. On bonds we will receive the interest, continuous installments that we will receive. Okay. Next one is the real estate. So in real estate we enjoy the we can say, the price rise in the real estate, that is the inflations. We know that if you purchase the 1 BHK in 2025 by the 30 lakhs, I may sell in 2030 by the 50 lakhs. So this 20 lakh is my we can say return. Also I continuously, by giving my property on a rent, I continuously can get the rent. So that price hike and rent is the return. And also we can say the commodities, like we can say the gold, silver, platinum, diamond, some of the agricultural commodities. So with these things, we can choose the different assets class. So this is how the investors can diversify his investments. So next one is, we can see, also the one type of diversification is the sectors. That means with the how the one investors can choose the different sectors. So that is the technology, healthcare, finance, energy. We can say also we can say IT sector, or FMGC sector. So these are the, we can say, the automobile sector. So all these are the different types of sectors which is available for the investment purpose. So by choosing these different sectors, okay, um, the investors can minimize the risk. Next one is, we can say, the geography. Geographics. That means we the investors can invest in a such a type of geographies where he thinks that the economies are doing well. The GDP growth rate or the inflation, interest rates, employment is in a control, and we can say the business friendly environment is things goods in some of the geographies. Then by investing in a such a type of countries, in a such a type of geographies, he'll enjoy the advantage of the geography. That means he'll get the good return on such a type of investment, that is the US, Europe, Russia, or some of the emerging markets like India, China, South Africa. So these are some emerging markets. Their GDP growth rate are good. We know that India is currently current GDP growth rate is 7.8%. That is the highest in the world. Okay, the richest country in the world, uh, America, grow at only the 1.7% growth. So these are some emerging markets. So whenever the investors invest in a such a emerging economies or markets, so they enjoy the good return in a such a type of geographies. Next one is the time. Okay, so investing across the different businesses, cycle stages, and the time horizon. We know that the business cycle is always active in the market. That means there these the four stages of the business cycle. Okay, that always active in the market. That means if we invest in the recession or the depression stage, then what happen? We will have the losses. Okay. Okay. So what we as the smart investors, what we need to do? We invest at at that time whenever the market is in the good condition. So market is at the peak. Okay, so that means we never invest when the market is in the recession or in the depression stage. We always invest in the market when the market is in the recovery and the expansion stage. Okay, that means in recovery and expansion stage, the we can say the market recover themselves, or the economies are recovering from that recession stage, and then that goes into the expansion stage. Okay, so when the economies you can say the businesses expand, economies grow at the good rate, then automatically the investor gets the good return. Okay, so this is so these are the types of diversification we can say the one investors can do, and then he can reduce the risks. So this is how in graphs you can see that this is how the diversification reduce the risk. So these are the percentage of risk is given here, that is the 30%, 20%, 10%. But by if you do if your diversification is less, okay, so on x-axis there is a diversification, on y-axis there are the percentage of risk associated with the your investment. Okay, so if you see the diversification is less, the risk is more. When you diversify, the more your risks reduces below 20%. Okay, you further diversify, then your risk came to 15%. You further diversify, your risk came to near about 11 to 12%. When you further diversify your investment, then risks comes below 10%. So this is how what is so this is the difference between the portfolio and the risk. Okay, so as much as you diversify the investment, so so your risks reduces with the same proportionate. So this is the relation between the portfolio and the risks. Okay, so now with some small graphical presentation, you can understand okay what is the portfolio. And in the second graphical presentation that I will show you that how you can make the smart portfolio. Okay, first you understand what is the portfolio management, and then we will understand what is the how we diversify the investment.
Let's regard them as investment clients, and you, as a portfolio manager, are tasked to create and manage your client's portfolio. There are three major stages: the planning stage, followed by the execution stage, and maintained through the feedback stage. The planning stage begins with an analysis of your client's risk tolerance, return objectives, time horizon, tax exposure, liquidity needs, legal and regulatory constraints, and unique circumstances or preferences. Use this acronym, RRTTLLU, to help you remember these 7 key elements of analyzing the client. They should all be detailed in a later lesson, so we just leave them for now. After the analysis, you should document your findings in an investment policy statement. The key element of the IPS is the investment objectives and constraints, which act as guiding principles for you and any other parties managing the portfolio. The IPS should also specify a benchmark that can be used in the feedback stage to assess the performance of the portfolio and whether objectives have been met. Also, during this stage, the IPS should be reviewed and updated every few years and any time the investor's objectives or constraints change significantly. Once the client has approved the IPS, you can proceed to the next stage, which is to construct a suitable portfolio based on the IPS. This is done by first deciding on a target asset allocation, followed by the security selection and the purchase of individual securities. The process of determining the target asset allocation starts with an analysis of the risk and return characteristics of various asset classes. Common asset classes identified are cash, fixed income securities, publicly traded stocks, private equity, real estate, as well as commodities. You can take the top-down analysis approach, which is to examine the current economic conditions and forecasts of such macroeconomic variables such as GDP growth, inflation, and interest rates in order to identify the asset classes that are most attractive. Based on the risk and returns expectations of the various asset classes, the target asset allocation can be determined. The next step is to identify the most attractive securities in each asset class. You can use security valuation models to identify undervalued securities to invest in. This is termed the bottom-up approach. Once all the securities have been identified, the final step is to construct the portfolio by purchasing the securities in the most cost-efficient way. And once that is done, the feedback step can be termed the maintenance stage. Over time, investor circumstances will change. Risk and return characteristics of asset classes will change due to economic changes, and the actual weights of the assets in the portfolio will change with asset prices. You, as the portfolio manager, must monitor these changes and update the IPS with the client if required. Update and target asset allocation and securities, and rebalance the portfolio periodically. Finally, the performance of the portfolio must be periodically evaluated. This is done by measuring the portfolio returns relative to the return on the benchmark identified in the IPS. Analysis of the portfolio performance may suggest that the client's objectives need to be reviewed and updated.
You're watching an excerpt from our comprehensive animation library. For more videos like this,
एट करोड़ करोड़ फिर इस डॉलर से जो इंडियन रुपीस के हिसाब से इतने रुपए होते। दोस्तों इलॉन मस्क की वेल्थ 220 बिलियन यूएस डॉलर से जो इंडियन रुपीस के हिसाब से इतने रुपए होते। मतलब अगर सिंपल लैंग्वेज में कहूँ तो 1.8 करोड़ करोड़। फिर इसके बाद दुनिया के सबसे अमीर लोगों की लिस्ट में थर्ड नंबर पे जिसका नाम है वो है बिल गेट्स का। इनकी वेल्थ फिलहाल 130 बिलियन यूएस डॉलर से मतलब इलॉन से 90 बिलियन कम। जो हम सभी को पता है कि उन्होंने माइक्रोसॉफ्ट कंपनी को स्टार्ट किया और वो उसके जरिए अमीर बने। लेकिन क्या आप जानते हो बिल गेट्स के पास अभी माइक्रोसॉफ्ट के सिर्फ 1% शेयर्स है। लेकिन जब माइक्रोसॉफ्ट का आईपीओ आया था 1980s में तब उनके पास माइक्रोसॉफ्ट के 49% शेयर्स थे। और फिर जब उनकी अच्छी खासी वेल्थ क्रिएट हो गई तो उन्होंने धीरे धीरे करके अपने माइक्रोसॉफ्ट के शेयर सेल करना शुरू किए और दूसरी कंपनीज में इन्वेस्ट करना शुरू किया डाइवर्सिफिकेशन के लिए। और इसीलिए अभी उनके पास ये कंपनी के सिर्फ 1% शेयर्स बचे। लेकिन क्या आप जानते हो अगर बिल गेट्स ने डाइवर्सिफाई नहीं किया होता और उन्होंने माइक्रोसॉफ्ट कंपनी के अपने 49% शेयर्स को होल्ड करके रखा होता तो उनकी वेल्थ फिलहाल 900 बिलियन यूएस डॉलर्स की होती और वो दुनिया के सबसे अमीर इंसान इलॉन मस्क से 3 गुना ज्यादा अमीर होते। तो क्या डाइवर्सिफाई करके बिल गेट्स ने गलती कर दी? अगर वो ऐसा नहीं करते तो वो क्लियरली दुनिया के सबसे अमीर आदमी होते। तो बिल गेट्स ने ऐसा किया क्यों? और जितने भी अमीर इन्वेस्टर्स होते वो सभी अपनी खुद की कंपनीज के शेयर्स सेल क्यों करते? दोस्तों इसी चीज को हम आज की वीडियो में डिस्कस करेंगे क्योंकि आप में से बहुत लोग मुझे पूछते कि हमें कितने स्टॉक्स में इन्वेस्ट करना चाहिए और हमें एक अच्छा पोर्टफोलियो कैसे बनाना चाहिए जो हर मार्केट कंडीशन में ग्रो होता रहे और जिससे हम बहुत ही जल्दी वेल्थ क्रिएट करें सेफ्टी के साथ। तो चलिए शुरू करते हैं। तो दोस्तों सबसे पहले हम ये समझते कि ये पोर्टफोलियो और डाइवर्सिफिकेशन होता क्या है और इसकी हमें जरूरत क्यों है। तो इमेजिन करो आप एक आइलैंड में रहते हो और वहाँ सिर्फ 2 कंपनीज है। एक है अम्ब्रेला सेल करने वाली कंपनी और दूसरी है कोल्ड ड्रिंक सेल करने वाली कंपनी। तो रेनी सीजन में अम्ब्रेला सेल करने वाली कंपनी का अच्छा सेल्स होता है और समर सीजन में कोल्ड ड्रिंक्स की कंपनी अच्छा प्रॉफिट कमाती है। लेकिन अब क्योंकि बारिश थोड़ी रैंडम होती है तो इमेजिन करो कि इस साल जरा भी बारिश नहीं पड़ी और आपने सिर्फ उसी एक कंपनी में यानी अम्ब्रेला सेल करने वाली कंपनी में इन्वेस्ट किया है। तो यहाँ पे आपको बहुत बड़ा लॉस हो जाएगा क्योंकि दूसरी तरफ बारिश नहीं पड़ने की वजह से ज्यादा गर्मी हुई और लोगों ने पूरे साल बहुत सारा कोल्ड ड्रिंक कंज्यूम किया। तो एक तरफ आपका लॉस भी हुआ और दूसरी तरफ जिस कंपनी में आपने इन्वेस्ट नहीं किया था उसको ज्यादा प्रॉफिट हुआ। और ये सोच के आपको अपने ऊपर बहुत गुस्सा आता है तो यहाँ पे अगर आप ऐसे अनएक्सपेक्टेड लॉसेस से बचना चाहते हो तो आप थोड़ा स्मार्ट प्ले कर सकते हो और आप इन दोनों कंपनी में इन्वेस्ट कर सकते हो, ताकि जिस साल एक कंपनी लॉस में रहेगी तो उसको दूसरी कंपनी आराम से कवर कर लेगी। अब दोस्तों, ये एग्जांपल सुनने में काफी सिंपल लगता होगा, लेकिन यहाँ पे हमने एक बहुत ही इंपॉर्टेंट लेसन सीखा है पोर्टफोलियो और डाइवर्सिफिकेशन का। वो है कि हमें फ्यूचर में इन्वेस्टमेंट के रिस्क को रिड्यूस करना है, क्योंकि बहुत सारे लोग डाइवर्सिफिकेशन के नाम पे ज्यादा स्टॉक्स तो खरीद लेते हैं लेकिन उनका रिस्क कम नहीं होता है। जैसे वो एक ही सेक्टर की ऑलमोस्ट सिमिलर कंपनीज में इन्वेस्ट कर लेते हैं और फिर जब मार्केट क्रैश होता है या कंट्री में खराब सिचुएशन आती है तो उनका पूरा पोर्टफोलियो लॉस में जाता है। उनके पोर्टफोलियो में 25-30 कंपनीज तो होती है और उनको लगता है कि उनका पोर्टफोलियो अच्छे से डाइवर्सिफाइड है, लेकिन वो देखते हैं कि जब मार्केट क्रैश होता है तो जिन कंपनीज में उन्होंने इन्वेस्ट नहीं किया होता है वो अच्छा कर रही होती है और उनका पोर्टफोलियो लॉस में होता है। तो इसीलिए इन्वेस्टिंग की फील्ड में ये पोर्टफोलियो सबसे इंपॉर्टेंट टॉपिक है, लेकिन इसकी सबसे कम बात होती है क्योंकि बहुत ही कम लोग सही तरह से इन्वेस्टिंग करते हैं। तो इसीलिए हमारा स्टॉक में इन्वेस्ट करने का मेन गोल ज्यादा प्रॉफिट कमाना तो होता ही है, लेकिन उसके साथ में हमारा सबसे इंपॉर्टेंट काम ये भी होता है कि हम एक अच्छा पोर्टफोलियो बिल्ड करें जिससे हमारा रिस्क कम हो, ताकि हमें रात में एक अच्छी गुड नाइट स्लीप मिल सके। तो एक चीज मैं काफी बार नोटिस करता हूँ कि जो लोग स्टॉक मार्केट में न्यू होते या थोड़ा सा इसके बारे में जानने लगते, जहां उन्होंने कुछ वीडियोस देख लिए होते, तो वो ज्यादातर किसी एक ही कंपनी में अपनी सारी सेविंग्स इन्वेस्ट कर देते। तो इतना ज्यादा भी आपको रिस्क लेने की जरूरत नहीं है, क्योंकि मैं बहुत सारे कमेंट्स रीड करता हूँ जहां लोग कहते हैं कि उन्होंने किसी एक ही पेनी स्टॉक में एक बड़ा अमाउंट इन्वेस्ट किया था, ये सोच के कि वो स्टॉक वहां से सिर्फ ऊपर जाएगा, लेकिन उसका उल्टा हो गया और उन्होंने अपना कैपिटल लूज कर दिया। और इसकी दूसरी तरफ कुछ लोग ऐसा करते हैं कि वो एक छोटा सा अमाउंट जैसे 5,000 रुपया या 10,000 रुपया या 50,000 रुपीज वो 30-40 कंपनीज में इन्वेस्ट कर देते हैं। तो ये भी एक गलत स्टेप हो गया, क्योंकि आपकी एक कंपनी में मुश्किल से 1,000 रुपया या 500 रुपया इन्वेस्टेड होगा। तो अगर उनमें से कोई एक स्टॉक बहुत ज्यादा ग्रो भी हो जाता है तो उससे आपके पूरे पोर्टफोलियो में कुछ खास फर्क पड़ेगा नहीं। आपको खुशी तो मिल जाएगी कि एक स्टॉक 5 गुना ऊपर गया, लेकिन आपने उसमें सिर्फ 2,000 रुपये इन्वेस्ट किया था, तो उस छोटे से अमाउंट से आपकी वेल्थ क्रिएट नहीं होगी। तो इसीलिए यहाँ पे आपका पोर्टफोलियो बनाने का रूल नंबर 1 ये है कि आपको 8 से 15 कंपनीज के बीच का ही एक पोर्टफोलियो बनाना चाहिए। लेकिन ये कंपनीज आप कैसे चुनोगे और कितने टाइम में, इसको हम थोड़ी देर में बहुत ही डिटेल में समझेंगे।
Most working professionals are finding jobs the wrong way. They see a job post and they hit the
और जो न्यू कंपनी में आप इन्वेस्ट करते हो तो आपको उसमें उतना कॉन्फिडेंस होना चाहिए कि आप उसमें एटलीस्ट अपने पोर्टफोलियो का 10% इन्वेस्ट करते हो। फिर जब लोग इस इन्वेस्टिंग की फील्ड में थोड़े पुराने होते तो वो स्टॉक्स में इन्वेस्ट करने से पहले उसकी थोड़ी रिसर्च तो कर लेते और कंपैरिजन भी करते, जैसे गूगल, अमेजॉन, फेसबुक या एप्पल, इसमें से उन्हें किस में इन्वेस्ट करना चाहिए। फिर वो इन पे डिटेल रिसर्च करने के बाद भी कंफ्यूज रहते कि ये तो सभी अच्छी कंपनीज है, तो वो इन सभी कंपनीज में इन्वेस्ट कर देते। तो ऐसी सिचुएशन में आपके पोर्टफोलियो में बहुत सारे स्टॉक जरूर होंगे, लेकिन आपका रिस्क इतना कम नहीं होगा, क्योंकि जब वो सेक्टर अंडर परफॉर्म करेगा तो आपकी वो सारी कंपनी ऑलमोस्ट सेम तरीके से नीचे जाएगी, जिससे आपके पोर्टफोलियो में काफी ज्यादा इम्पैक्ट होगा। तो ये तो ऐसा हो गया जैसे मान लो आपको एक 11 प्लेयर की क्रिकेट की टीम बनानी है और आपको एक अच्छा विकेट कीपर चाहिए, तो आपने 5 विकेट कीपर चुन लिए। तो इससे आपको कुछ खास फायदा होगा नहीं, क्योंकि आपको विकेट कीपर सिर्फ 1 या 2 चाहिए। बाकी आपको एक पूरी बैलेंस टीम भी बनानी है, तभी जाके आप मैच जीत पाओगे। तो उसी तरह आपको अलग अलग सेक्टर्स की अलग अलग कंपनीज में इन्वेस्ट करना है, या फिर अगर कंपनी सेम सेक्टर में है तो आपको अलग अलग सब सेक्टर की कंपनी सेलेक्ट करना है। तो यहीं पे आपको पोर्टफोलियो बनाने के रूल नंबर 2 को फॉलो करना है कि आपको एटलीस्ट 5 से 6 सेक्टर में डाइवर्सिफाइड होना चाहिए। फिर इसके बाद अपने रिस्क को कम करने के लिए और साथ ही साथ अच्छा प्रॉफिट कमाने के लिए आप इंटरनेशनल कंपनीज में भी इन्वेस्ट कर सकते हो। जैसे यूएस में बहुत सारी अच्छी अच्छी टेक कंपनीज है, जैसे गूगल, एप्पल, अमेजॉन, ये सभी कंपनीज पूरी दुनिया भर में बिजनेस करती है और ये हमारी इंडियन कंपनीज से काफी अलग है। अब दोस्तों, यहाँ पे मैं कोई रिकमेंडेशन नहीं दे रहा हूँ, लेकिन ऐसी कंपनीज को ऐड करने से आपके पोर्टफोलियो का रिस्क भी कम होगा, क्योंकि ये पूरी तरह दूसरी कंट्री में है, एक अलग स्टॉक एक्सचेंज में ट्रेड होती है और एक बिल्कुल अलग ही करेंसी में बाय और सेल होती है। और फिलहाल यूएस स्टॉक मार्केट में एक स्लो डाउन चल रहा है, जहां ये सब टेक कंपनीज काफी रीजनेबल वैल्यूएशन पे सेल हो रही है। तो इसीलिए बहुत लोग मुझे पूछते हैं कि वो यूएस स्टॉक्स में इन्वेस्ट कैसे कर सकते हैं। तो उसके लिए आप वेस्टेड का मोबाइल ऐप यूज कर सकते हो, जहां से ये इंटरनेशनल इन्वेस्टिंग का पूरा और आपकी करेंसी 1.2% के फिक्स रेट में एक्सचेंज होती है, जो मार्केट में लोएस्ट है। और इसके साथ में इन्होंने एक और फीचर ऐड किया है, जहां से आप इस वेस्ट के सेक्शन में पोर्टफोलियोज बने, जिसके जरिए आप एक थीम के ऊपर वेस्ट बना सकते हैं। कुछ थीम्स जैसे मोट, जहां टेस्ला, फेसबुक, माइक्रोसॉफ्ट, अमेजॉन और नेटफ्लिक्स जैसी कंपनीज है, वहां आप एक साथ इन्वेस्ट कर सकते हो। फिर उस पर आप एक एसआईपी अपने हिसाब की फ्रीक्वेंसी। तो मैं आपको बता दूं कि यहाँ पे जीरो अकाउंट मिल जाएगी। फिर दोस्तों इसके बाद एक बहुत ही इंपॉर्टेंट पॉइंट ये है कि बहुत लोगों को स्टॉक मार्केट में इन्वेस्ट करने में प्रॉब्लम होती है। उसका सबसे मेन रीजन ये होता है कि मार्केट बहुत ही वॉलेटाइल होता है, यानी बहुत ज्यादा वाइल्डली फ्लक्चुएट होता रहता है। कभी बुल मार्केट चलता है तो कभी बियर मार्केट, और लोगों को समझ नहीं आता कि उन्हें इन्वेस्टिंग शुरू कब करना चाहिए, क्योंकि एक साथ एक बड़ा अमाउंट इन्वेस्ट करना लोगों को अनसेफ लगता है। और यहाँ पे भी एक रिस्क होता है कि कहीं आप गलत टाइम पे इन्वेस्ट ना कर दो। तो इस प्रॉब्लम का सोल्यूशन है SIP, यानी सिस्टमेटिक इन्वेस्टमेंट प्लान, जहां आप हर महीने एक छोटे से अमाउंट से, जैसे 500 रुपए से इन्वेस्ट करना शुरू करते हो। और अगर किसी मंथ आपके इन्वेस्टमेंट डाउन भी हो तो इससे फायदा ये होगा कि आपको उस महीने ज्यादा यूनिट्स और शेयर्स मिलते हैं। और जब मार्केट अच्छा करता है तो आपके इन्वेस्टमेंट्स की वैल्यू बढ़ जाती है। इसीलिए इसे हम टाइम डाइवर्सिफिकेशन कहते हैं, जिससे आपका रॉन्ग टाइमिंग पे इन्वेस्ट करने का रिस्क बहुत ही कम होता है। क्योंकि मार्केट कब ऊपर जाएगा या कब नीचे जाएगा ये प्रिडिक्ट करना काफी ज्यादा मुश्किल होता है। बड़े बड़े सक्सेसफुल इन्वेस्टर भी इस चक्कर में पड़ते नहीं है। इनफैक्ट अगर आप बिल गेट्स या जेफ बेजोस की स्ट्रेटेजी को थोड़ा गौर से देखोगे तो आपको यही पता चलेगा कि ये अपनी कंपनीज के शेयर्स को हर महीने एक फिक्स्ड अमाउंट के साथ सेल करते थे। जेफ बेजोस पिछले 15 सालों से अमेजॉन कंपनी के शेयर्स हर महीने सेल करते आ रहे। वो ये नहीं देखते कि चलो इस महीने मार्केट अच्छा है तो चलो अभी थोड़ा सेलिंग कर लेते। वो हर महीने कंसिस्टेंटली स्टॉक्स सेल करते। तो ये भी एक टाइप की SIP स्ट्रेटेजी है। जिस तरह हम सिस्टमेटिकली बाय करते तो ये सिस्टमेटिकली अपने शेयर्स को सेल करते। अब दोस्तों अगर आप लोगों ने अपना पोर्टफोलियो अभी तक नहीं बनाया है तो मैं आप लोगों को एक सिंपल एडवाइस देता हूँ कि आपको अपना पोर्टफोलियो कैसे बनाना चाहिए। सबसे पहला स्टेप है कि आप कोई सिर्फ एक कंपनी ढूंढो इंडिया की 5,000 कंपनीज में से, उस पर अच्छे से रिसर्च करो, उसके बारे में हर एक चीज पढ़ो और पता लगाओ कि कौन सी कंपनी सबसे बेस्ट है, जिसका ग्रोथ का स्कोप सबसे अच्छा है और जो फिलहाल सबसे अच्छे वैल्यूएशन पे सेल हो रही हो। अब दोस्तों ये कंपनी कोई भी सेक्टर की हो सकती है, क्योंकि ये आपके पोर्टफोलियो की पहली कंपनी होगी। फिर उसी कंपनी में आपको पूरे साल इन्वेस्ट करना चाहिए एक लॉन्ग टर्म माइंडसेट के साथ, जैसे 10-20 साल के लिए। मतलब जो भी सैलरी आप इस साल कमाओगे आपको उसी एक कंपनी में इन्वेस्ट करना है। और इस एक साल के पीरियड में आप उसके बारे में और अच्छे से रीड करते रहो, ताकि उस कंपनी के बारे में आपको सारी नॉलेज होगी। फिर दूसरा स्टेप ये है कि आपको अब कोई एकदम दूसरा सेक्टर पकड़ना है जो पहली कंपनी से एकदम अलग हो। जैसे मान लो पहले आपने FMCG सेक्टर की कंपनी चुनी थी, तो इस बार दूसरा सेक्टर आप एनर्जी सेक्टर ले लो या IT सेक्टर ले लो। फिर इस सेक्टर को आप समझने की कोशिश करो और अगले एक साल तक आप इसमें से सबसे बेस्ट कंपनी ढूंढ के निकालो और उसी में इन्वेस्ट करो। और इसी तरह आपको ये प्रोसेस कुछ सालों तक करना है, जिससे आपकी लाइफ टाइम में आपके पास एक बहुत ही बढ़िया पोर्टफोलियो होगा। और उस पोर्टफोलियो की हर एक कंपनी में आप कॉन्फिडेंट रहोगे, क्योंकि वो सबसे बेस्ट में से बेस्ट कंपनीज होगी। तो इसीलिए फाइनली मैं सिर्फ इतना ही कहूंगा कि अगर आप किसी भी बड़े बड़े इन्वेस्टर्स को देखते हो जिनके पास बहुत सारी कंपनीज होती है, तो उन्होंने वो इतने सारी कंपनीज का पोर्टफोलियो रातों रात नहीं बनाया होता है। वो पोर्टफोलियो उन्होंने लाइफ टाइम में बिल्ड किया होता है। और जब भी वो कोई एक कंपनी को बाय करते तो उस पर काफी लंबी रिसर्च करते, 6 महीने या साल भर तक, तब जाके उसे खरीदते। फिर चाहे वो इलॉन मस्क हो या बिल गेट्स हो या जेफ बेजोस, ये लोग वर्ल्ड की अच्छी कंपनीज को ओन भी करते और अपनी कंपनीज के साथ दूसरी कंपनीज में भी इन्वेस्टेड रहते। लेकिन उन सारी कंपनीज को वो खुद की कंपनी समझ के इन्वेस्ट करते। वो सिर्फ कंपनीज के स्टॉक बाय नहीं करते, वो उन बिजनेस में एक्चुअली अपना टाइम और अपना पैसा दोनों इन्वेस्ट करते। क्योंकि उन्हें पता है कि फ्यूचर अनप्रिडिक्टेबल होता है। जैसे पैंडेमिक में हम सबको पता चला कि कोई भी न्यू प्रॉब्लम कहीं से भी आ सकती है, जिसके बारे में किसी को भी पता नहीं होगा। और अगर आपको अपनी इन्वेस्टिंग की जर्नी में कोई एक कंपनी ऐसी मिलती है जिसमें आपको बहुत ज्यादा कॉन्फिडेंट है, तो उसमें आप एक बहुत बड़ा अमाउंट इन्वेस्ट कर सकते हो। क्योंकि वॉरेन बफे भी कहते हैं कि पुट ऑल योर एग्स इन वन बास्केट एंड देन वॉच इट क्लोजली। मतलब अपने सारे अंडे एक ही बास्केट में रखो और फिर उसी एक बास्केट का पूरा ख्याल रखो। लेकिन अगर आप ऐसा नहीं कर सकते, जिसमें मेजोरिटी लोग होते हैं, तो हमें एक वेल डाइवर्सिफाइड पोर्टफोलियो बनाना चाहिए, ताकि हमें गुड नाइट स्लीप मिल सके और किसी भी मार्केट कंडीशन में हमें टेंशन लेने की जरूरत ना पड़े। तो दोस्तों आज की वीडियो में इतना ही। पोर्टफोलियो मैनेजमेंट एक बहुत ही इंटरेस्टिंग टॉपिक है और ये मेरी फेवरेट भी है। फ्यूचर में हम इस टॉपिक को लेके बहुत सारी इंटरेस्ट
Okay, so guys, this is all about the portfolio management and the diversification in the portfolio management. If anyone have any questions, you can ask. We have the 2 minutes. Okay, if no one has no questions, then we can sum up the sessions. Okay, thank you guys. You can leave the sessions now.